Is there a worry that actually there's so many companies that are scrambling to IPO just because valuations are insane, and 2 years from now it all comes crashing down?
Well, look, thanks for having me on this morning, Francine and Tom. It's certainly true that activity levels are very, very busy out of the gates in January. You mentioned overall IPO volumes, 25 billion of SPAC proceeds raised just in January, and that compares to 80 billion having been raised throughout the course of 2020. So we're certainly seeing unprecedented levels of volume, but we're also seeing a lot of demand. And in this low interest rate environment, we're continuing to see a rotation of funds into equities, and we believe that underpins the levels of volume and activity that we're seeing right now. As always, IPO windows do open and close. Equities right now are forecasting a significant recovery in the second half of the year. So the windows can certainly close. And if we do see challenges to this recovery as it relates to the vaccine deployment in the second half of the year, then we'll certainly see a slowdown in activity. But for now, offerings are getting very well oversubscribed and the aftermarkets are robust.
What are the fast-growing digital plays that make sense at these sort of levels, Philip?
Well, we've certainly seen significant activity from e-commerce. If we look at the IPOs that we've had in the market recently, we priced InPost last week. That was a very successful offering from Poland. We're in the market this week with Moonpig from the UK. Also Auto1, which is a German European secondary car business. So certainly internet-generated growth that has seen a catalyst to business models through this period of COVID. But broad technology, content, software, that's really where we've seen the drivers of activity in recent weeks and months.
Phil, I know that you have a record 14 days in a row of rubber chicken on the old IPO circuit. You hold that. I got a trophy from Corbat for that. It's gone. Today we have a new transparency, a different transparency. Are we getting the correct information on these investments, and particularly on the SPACs without the rubber chicken lunch?
Look, I think we've become a lot more efficient as it relates to investor education and marketing. And this period of COVID and the ability to use Zoom, I think will have long-lasting effects when we come through COVID. So the ability to engage investors and educate investors, the ability to be time efficient for our CEOs and CFOs has certainly improved, and we've become a lot more productive. Also, the information dissemination, it's still getting out there, but it's getting out there in different means. So whether that be testing the waters in the US or investor education and cornerstone investing in EMEA, it then allows for a more accelerated marketing in the public domain. But we believe the necessary education is being conveyed and the level of engagement with investors to make for sound investment decisions.